All right, everyone, welcome back for another episode of Carnivore Trades. Today is Thursday, February 10th, 2022. Lots to cover today. Hottest CPI since 1982. We were just joking about this on Twitter. I mean, look at this move here on the triple Qs, and they popped this up in the last 10 minutes here. And, it's almost like they just were trying to mess with people. They did that yesterday. They closed it right on the 200 moving average. We lost that today. And then came right back down to this 20, and then they tried to popping it. It's like they almost tried to close it right on that 20 moving average. They never make it easy, but totally crazy volatility today. And you got to give it to the Bears today. They were in control. So we had the market gap down on the CPI print, 7.5, so highest number since 1982. And then we started to rally back, and we filled this gap up here. And I was actually expecting, I was expecting at least a pullback off here. We talked about the VIX yesterday. We said that 20, they weren't just going to let 20 go. Like they're not just going to not defend this level. So, when you hit that, expected to be a pullback. Then I thought we'd probably, make another leg up. And, I was looking for, if we pierce the highs, you're going to see major short covering. So that's kind of what we were looking for. Obviously, Bullard kind of just said, screw you, and came out and said, essentially, yeah, we're going to look to potentially hike rates 100 basis points by July. And really that threw a wrench in everything. And it was just all selling from there. So you dipped to that 100 moving average, tried to hold the 200, rolled over, couldn't hold it, and then rolled over before that little pop there, little relief bit at the end of the day. Now, there was some weird stuff going on really all day long here, but we'll talk about that in a minute. But in the meantime, we may want to go down here and test that 440 level after all. So we talked about that a few days ago. Before we really bottomed out here. So I'm thinking that's kind of like the next area here. Obviously, you'll probably have, they'll probably put up a fight at the 200 moving average, but, it's a pretty ugly reversal. You had some good volume on that. Now, I want to share something with you here. So let's take a look at the spiders. If we look at the option chain, and this kind of explains a lot of this move, at least I think. So if we just pull up next week, so next week is OpEx week. And really the 450 number has been that's been a level all month really. And you can see there's already a big straddle right there. So 61,000 open interest, lots of calls being bought today, 39,000 or 29,000 volume there, and then 70,000 open interest on the other side. So get used to this. It looks like it's going to be a choppy week, tomorrow and possibly all next week. If they want to pin it to 450, there's nothing to say we can't trade down to 440. Bounce back up to 455 and then, close back there at Friday. So we could be in for some serious chop ahead. And, that's really just how the options market dictates things sometimes. But in my opinion, that does explain a lot of this move, at least today. But in any case, anyway, slice and dice it, Bears in control, and got to give it to them today on that one. A few things that are a little strange, though. So if we look at the Russell 2000, Russell's been the weakest, laggard so far this year, but over the last, we've noticed over the last week or so, it's actually outperformed a little bit. And if you look at the hourly, it's actually still holding this inside bar low. So Russell kind of holding up, and then we look at the spiders, that lost its inside bar low. The diamond lost it. The triple Qs lost it. So, it's like the Russell's the strong name all of a sudden. So very weird stuff. We also had Cloud Software holding up as well. I mean, 1.8 down 1.58%, but it held yesterday's lows. There were some weird kind of pockets of strength in the market. The semiconductors, they eventually rolled over, but throughout the day they were really holding this pivot while the rest of the market was kind of dumping. There was weird pockets of strength, even with yields ripping higher. And by the way, we closed out the second half of our TBT position today for a nice gain, 16.7%. On the second half. We've been holding this one for quite a while, and that was a nice gainer for us. Still perfect on the year trading, so absolutely having an awesome year so far. But yields pushing up here, and again, we talked about this. So we'll just talk about the 10-year right now. We talked about that 2 to 2.1 area. We're starting to get there. We're getting close. I do think yields are getting a bit top heavy. I don't think we really did enough consolidation to really push through that level at this point. Nice little surge there on the 10-year. And I think Bullard's comments almost could have marked a top in a sense. Into the 200 moving average, just slightly minor, but you got all this chop in here, so it wouldn't be surprising to see yields do a little bit more backing and filling before they make another leg up. And you can see Bullard's comments came out right here, got a pop, and then it, immediately kind of reversed. So, sometimes you get these moves here at the end of a move, and it kind of marks the top when you wouldn't think it would. But, in any case, nice move for yields here. And by the way, the 2-year was up 18% today. So let's just talk about financials, get that out of the way right now. And, we talked about, hey, if the yield curve starts to flatten, it's not going to be good for financials or really anything. And that's why you're seeing the XLF pull back, down almost 1% today. JP Morgan down 0.42%. Wells Fargo, a beast, holding the flat line there. Bank of America down 0.5%. So banks starting to slip a little bit here. Broker dealers down 1.5%. Morgan Stanley made an all-time high today, intraday, then rolled over. Goldman also rolling over, down 1% as well. So financials, again, we've got to continue to watch that flattening of the yield curve. If that happens, everything's going to come down, and nothing's really going to be safe here. But yeah, anyways, we talked about financials. We mentioned semis a little bit here. We got up into that 290 area. I thought we'd get up to 293, 292, maybe that 50 moving average, but started to pull back a little bit ahead of time. But in any case, you had these pivots down in this area, so it did go up there and test that and roll over today. Lost the 100 moving average, still holding the 20 though, so it's kind of ping-ponging in the middle. IGV we mentioned as well. That one did hold yesterday's lows, so it's strangely showing a little bit of strength. So we'll give it the benefit of the doubt. Dow Transports was a weak one today, down almost 2% here, filled this gap, and kind of, potentially making a lower high here. So we'll have to keep that on radar. It's looking like it wanted to make a higher high and test this 16,000 handle. But, at this point, it looks like it wants to go back down to 15. So a little bit of weakness there from the Dow Transports. Home builders also obviously weak, down 3.6%. With that higher yield, again, that's going to put pressure on real estate. VNQ down 2.37%. So weakness there really across the board. Energy, again, pulling back a little bit, but still, still holding up okay. Down, 0.6%. It's still very close to the 52-week highs. XLE is holding up all right. XOP actually finished green today. OIH basically at the flat line as well, and making a new high, almost a 52-week high, or at least a, 7 or 8 month high on the OIH. So energy's still holding up, hanging in there okay. I thought we might get a sell signal on crude today, but I didn't get anything like that. It got close though. This was a pretty nice sell-off, a pretty gnarly sell-off there on crude. Did not really get the sell signal though. So again, we'll give it the benefit of the doubt. It just wants to keep chugging higher. If it gives us some type of bearish pattern, then maybe we can look to play it that way. But as of right now, yes, it's really overbought. It's long in the tooth, but it's just been a powerhouse, and I don't really have any sort of real sell signal on it. So that's just the way it goes. Nat gas also pulling back a little bit. We talked about it having to test that $4 handle, that previous pivot. Got there, passed it. You're still in the red, but you did put a little bit of a tail in there. So maybe it gets a bid. Maybe wants to go up and fill that 455 gap there. But nat gas coming in as well and continuing to fade off those highs. Dollar index, this is a wild doji candle here. So it did close green. And yeah, I really don't have a read on this right now in the near term. I mean, you do have kind of a little inside bar here. The dojis usually precede some type of a change in direction. Well, we'll see. It's a wide range doji. It's a big spinning top candle. So we'll have to see what it does here. Again, you guys know the monthly time frame. I'm still a fan of it, and I still think the dollar will move higher. It just may take a little bit of time. Gold was green earlier today and rolled over just like everything else. So having some trouble with that 1840 handle. If it can start going sideways, though, start going sideways, do some backing and filling, then maybe it's setting up to attack that 1850, 1860 area. So we'll kind of, it's hanging in there for now. It held up. It didn't take out the low of the day. The GLD here didn't take out the low of the day like everything else did. So, it held up relatively well. So, we'll give it a slight upside bias for now. Silver got up to that 2362 area that I was talking about, pulled back pretty sharply. So that does not look like it's ready to do anything just yet. But again, you want to look for pattern here. If it can go sideways, it'll tell you it's probably setting up to move. Platinum, this pattern is still good. Also a pretty wide spinning top here, though, as well. So maybe we get some type of a move tomorrow. We'll see if that sets up, though. Palladium, again, nothing really new here, just more backing and filling, holding that tail candle for now. And copper was, I thought it was going to confirm today. I thought it was going to confirm. It was all the way up to the high of the day was 470.85. So, copper, have a nice day, pulled back a little bit. We'll see what it does tomorrow. If it pulls back sharply and closes below 451, it's going to be, I almost say it's typical of what it's been doing lately. Every time it gets above that 451, it just can't hold it. But we'll just see what it does tomorrow. Again, we want to see a weekly close above this level, and then we'll kind of go from there. But it could confirm tomorrow. If it closes above the high tomorrow, we'll call it confirmed. Anyways, nice move there. So let's flip over to Bitcoin. Bitcoin actually surprisingly held up pretty well, down just 1% here. So with a very risk-on asset like crypto, Ether down 4%, Doge down 3.7, Litecoin down 2. These are not big moves for cryptos. Anything less than 5% is really not a big move for crypto, honestly. But crypto's holding up okay. So there's another kind of positive for the market, and another weird kind of indicator. We talked about the IWM holding up and IGV holding up. Is being strange that with rates moving up the way they were, you'd think tech, for one, IGV would be selling off sharply, and the IWM is made up of a lot of banks, but typically it's just not going to perform well in a risk-off environment. It's just small caps, right? But obviously IWM holding up. So there's been a lot of weird stuff going on here. I think a lot of it is OPEX related. I think the games are already starting. Again, we'll watch that 450 strike tomorrow. Do they pin it there tomorrow? Do we have continued downside? I think the downside target here, if we do continue, you'll probably have a little pit stop at this 200 moving average, but if we have some more force behind the move like we did today, tomorrow, you're probably looking at around that 440 handle. So that's kind of where you would look. Maybe 442. You got that green bar high there around 441.95. So that would be kind of an area there to look for. But we'll see what happens here. We got OPEX next week. There's probably going to be a lot more whipsaw like this, and we talked about this earlier in the year. This whole year is going to be volatile. It feels like as soon as the bears get control, the market reverses and it starts to move higher. But then as soon as the bulls start to look like they're getting control, the bears come back in. So it's going to be a volatile year. You don't want to be a cowboy this year. You want to be professional. Manage risk very smartly and wisely, and you'll do okay. But, do not, this is not 2020 or 2021 where the market just rewards recklessness. It's going to be a volatile year. Anyways, guys, I digress. Take care. Come find me at carnivoretrades.com. Like, comment, subscribe, etc. And I will talk to you all tomorrow.